In managing the source of funds, starting from the search for funding needs, then the search for available source of funds. Management of funding sources is now known as bank fund management. Assalamu'alaikum warahmatullahi wabarakatuh. My name is Juljas Topi. I'm a student from Raden Fatah Palembang with the major Islamic banking. And in this video, I want to explain about bank fund management. The banking world is one of the institutions that play a very important role in the economy of a country, especially in the field of economic financing. Achievement of bank goals, both in the short term and long term, is determined by several factors such as the philosophy adopted, minimum cost, and other factors. There are two types of bank management philosophy, namely 1. Aggressive pattern. Aggressive pattern that is more emphasis on the purpose of achieving profit, so that it is in this pattern risk is preferred. 2. Conservative pattern that is not like risk, so that bank liquidity is maintained or safe. The aggressive pattern plays more profitability, while the conservative pattern priority security more than profitability. In financing its activities, banks steadily need funds. The funds themselves come from free. Bank fund management is a process of managing the collection of public funds into the bank and the allocation of this fund for the benefit of the bank and the community in general, as well as optimal fertilization through mobilizing available resources to achieve the level of profitability. The company's ability to obtain a profit effective. Educate in accordance with applicable regulatory limits. Management of bank funding sources. What is intended by source of bank fund is the award of bank in collection fund to finance their operations. This is in accordance with its function that the bank is a financial institution where its daily activities are in the field of buying and selling money. Of course, before selling money, giving loans, bank must first buy money or raise fund, so that from the difference in interest that the bank will get a profit. So the understanding of the source of bank fund is the business of bank in collection fund from the community acquisition depend on the bank itself, whether from public deposits or from other institutions. The choice of source of fund will determine the size of the cost incurred. Therefore, the selection of source of fund must be done appropriately. Broadly speaking, source of bank fund can be obtained from. Source of bank fund can be obtained from fund source from the bank itself. Obtain fund from the source of the bank itself, capital itself, mean the fund obtained from the bank on fund. Fund source from the bank itself. Obtaining fund from the source of the bank itself, capital itself, means the fund obtained from the bank's own funds. The source for fund source from the bank itself consists of paid in capital from shareholder, that is, capital from old shareholder or new shareholder. Earning reserve, which are profit that are annually backed up by bank and have not been used for a while. Earning reserve are a portion of bank profit set aside in the form of capital reserve and other reserve that will be used to cover future risks. Bank profit that has not been shared is profit for the year but has not been distributed to shareholders. With greater the capital owned by a bank, it means the public trust is getting better, and the bank will be recognized by other banks both at home and abroad as a bank with a strong position. 2. 2. Fund source from the wider community. Saving on current account. It is a bank term from a method of payment that is almost the opposite of a check system. This funding source is the most important source of one for bank operation and is measure of the bank's success if it is able to finance its operation from this source for fund. 2. Savings is part of the income of the community that is not often is saved as a reserve in case of short-term protection. Factor of the level saving that in accordance with the high and low income and high and low bank interest rates. C. Deposit is a type of saving service that is usually offered by bank to the public. Deposit usually have a certain period in which the money in it should not be withdrawn by customer. Deposit interest is usually higher than ordinary saving interest. And finally, fund source from other institutions. This third source of one is additional if bank experience difficulties in finding the first and second source of fund above. A. Bank Indonesia Liquidity Extension (BLBI) is a loan given by Bank Indonesia to banks experiencing liquidity problem, namely the company ability to meet its short-term obligation. This liquidity credit is also given to financing certain business sector. B. Interbank loan call money. Usually this loan is given to banks that have lost clearing between the clearing house and are unable to pay their loss. This loan is usually requested if there is an urgent need met by the bank. These loans are short-term with relatively high interest rates compared to other loans. C. Loans from private banks. Loan obtained by bank from private parties, loan from bank or other finance institution abroad that usually take the form of long-term loans. D. Money market securities (SPBU), namely that securities issued by private business entities, government and government agencies, generally with a maximum term.